This first question comes from Bill Mitchell. I received more questions about this than any other question. He writes, Warren, in a 2003 Fortune article, you argued for import certificates to limit trade deficits and said these import certificates basically amounted to a tariff. But recently, you called tariffs an act of economic war. Has your view on trade barriers changed, or do you see import certificates as somehow distinct from tariffs?
Yeah, well, the import certificates were distinct, but their goal was to balance imports against exports, and so that the trade deficit would not grow in an enormous way. In fact, it would have, and it had various other provisions in it to help third world countries at that time, as they were called, to perhaps catch up a little bit. And they had a variety of aspects to them, but basically they were designed to balance trade. And I think you can make some very good arguments for the fact that balanced trade is good for the world, and the more balanced trade there is, the better. It will continue to be better for cocoa to be raised in Ghana, and coffee in Colombia, and a few things. And over time, the American industry has gone from being an agricultural country. This was nothing but an ag country. I mean, virtually, and that was only 250 years ago. And we have become a very industrial country, and we did not want to make that a situation, in my view, where we ran greater and greater deficits, building up greater and greater debts against the country. So I designed this import certificate thing, which Charlie thought was a little Rube, too much like Rube Goldberg. I don't know whether that name is, but it's gimmicky. But it's certainly a lot better than anything I think than we're talking about now. And there's no question that trade can be an act of war, and I think it's led to bad things. Just the attitudes it's brought out in the United States. I mean, we should be looking to trade with the rest of the world, and we should do what we do best, and they should do what they do best. And I don't think it. That's what we did originally. I mean, we were good at producing tobacco and cotton 250 years ago, and we traded it. And we want a prosperous world with 8 countries with nuclear weapons, including a few that are what I would call quite unstable. I do not think it's a great idea to try and design a world where a few countries say, ha, 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 we've won, and other countries are envious. So my import certificate idea, which went no place, I think we've got extra copies, Rob. With not a great demand for the copies. If anybody did, and if you'd like, and write the office, I think we could probably send you a copy of it. But the main thing to do is not use trade should not be a weapon. And the United States, we've won. I mean, we have become an incredibly important country, starting from nothing 250 years ago. There's nothing been anything like it. And it's a big mistake, in my view, when you have 7.5 billion people that don't like you very well, and you got 300 million that are crowing in some way about how well they've done. And I don't think it's right, and I don't think it's wise. I do think that the more prosperous the rest of the world becomes, it won't be at our expense. the more prosperous we'll become, and the safer we'll feel, and your children will feel someday. So that's. But don't expect my import certificate idea to go down there with Adam Smith's Wealth of Nations or anything. Okay, let's go to Area 1.
This next question comes from Advait Prasad in New York. He writes, today, Berkshire holds over $300 billion in cash and short-term investments, representing about 27% of total assets, a historically high figure compared to the 13% average over the last 25 years. This has also led Berkshire to effectively own nearly 5% of the entire U.S. Treasury market. Beyond the need for liquidity to meet insurance obligations, is the decision to raise cash primarily a de-risking strategy in response to high market valuations, or is it also a deliberate effort to position Berkshire's balance sheet for a smoother leadership transition, providing Greg Abel with maximum flexibility and a clean slate for future capital allocation decisions? And I will add one line from another shareholder, Mike Conway, who asks, are you encouraged you may see some fat pitches coming your way?
Yeah. Well, I wouldn't do anything nearly so noble as to withhold investing myself just so that Greg could look good later on. Now, if he gets any edge when I leave, I'll resent it. So the amount of cash we have is we would spend, well, we came pretty close to spending $10 billion not that long ago, for example. But we'd spend $100 billion. I mean, and those decisions are not tough to make. When something is offered that makes sense to us and that we understand and offers good value and where we don't worry about losing. And the one problem with the investment business is that things don't come along in an orderly fashion, and they never will. I mean, it isn't like every day. The long-term record is sensational, but that is not a product. And I've been I've had 200 trading days times 80 years. I've had 16 million trading days. It kind of, 16,000 trading days. It would be nice if every day you got 4 opportunities or something like that, and you could, and they were expected to be equally attractive. If I was running a numbers racket, every day would have the same expectancy of that I would keep 40% of whatever the handle was, and so the only question would be is how much we transacted. But we're not running that kind of a business, and so we're running a business which is very, very, very opportunistic. And Charlie always thought I did too many things. He thought if we did about 5 things in our lifetime, we'd end up doing better than if we did 50, and that we never concentrated enough. So that we would rather have, if we've got $335 billion now in treasuries, we would rather have conditions that are developed where we would have like $50 billion or something like that. But that just isn't the way the business works. And we have made a lot of money by not wanting to be fully invested at all times. And we don't think it's improper, actually, for people who are passive investors just to make a few simple investments and sit for their life. But we've made the decision to be in the business, so We think we can do a little better than that by behaving in a very irregular manner. But if you told me that I had to invest, let's say that we have a roughly $40 billion a year coming in, and we start with 335. If you told me I had to invest $50 billion every year till we got down to $50 billion, that would be the dumbest thing in the world to invest in that manner. Things get extraordinarily attractive very occasionally. The long-term trend is up. Nobody knows. And I certainly don't know. Greg doesn't know. Ajit doesn't know. Nobody knows what the market is going to do tomorrow, next week, next month. And nobody knows what business is going to do tomorrow, next week, or next month. But they spend all their time talking about it because it's easy to talk about. And but it has no value. I've never found anybody I want to listen to on the subject. And on the other hand, I've found that leafing through things like that big Japanese book that I can't read anymore, that's a treasure hunt. And every now and then you find something, and occasionally, very occasionally, but it'll happen again, that I don't know when. It could be next week, it could be 5 years off, but it won't be 50 years off. We will be bombarded with offerings that we'll be glad we have the cash for. And it'd be a lot more fun if it would happen tomorrow, but it's very unlikely to happen tomorrow. Very, very unlikely to happen tomorrow. But it's not unlikely to happen in 5 years, and then the probabilities get higher as you go along. It's kind of like death. I mean, if you're 10 years old, the chances that you're going to die the next day are low. If you get to be 115 or something like that, it's almost a cinch. Particularly if you're a male. I mean, all the records are held by females in terms of age. And I tried to get Charlie to have a sex change so he could test out whether... he did pretty well for being a male, I'll put it that way. Okay. Station 2.
All right, this question comes from Jessica Poon, who says, you've long been a strong believer in the American tailwind and the resilience of the United States, and history has proven you correct. Today, the U.S. appears to be undergoing significant and potentially revolutionary changes. Some investors are now questioning the concept of American exceptionalism. In your view, are investors being overly pessimistic about the U.S. economy, or is the country indeed entering a period of fundamental change that requires a reassessment from a new perspective?
Well, I would say that Jessica, who I believe she is the step-granddaughter of one of our managers that I mentioned in the annual report. May not be the same one. But in any event, America's been in significant and revolutionary change really ever since it was developed. I mentioned that, we started out as an agricultural society. We started out as a society with high promises, and we didn't deliver on it very well. We said all men were created equal, and then we wrote a constitution that said blacks get counted as 3/5, and in Article 2, you'll find male pronouns used 20 times and no female pronouns used. So, it took till 1920, I should say, till the 19th Amendment was passed, saying, oh yeah, we promised the women this back in 1776, and now we'll do something about it. And then we didn't do something about it for a long time. So we're always in the process of change. We'll always find all kinds of things to criticize in the country. But the luckiest day in my life was the day I was born. You know, 'cause I was born in the United States, and at the time, about 3% of all the births in the world were taking place in the United States. And I'd like to say that I had something to do, you know, listen, so sent messages out to my parents, for God's sakes, moved to the United States before I was born or anything. But I was just lucky. And I was lucky to be born male. I was lucky to be born white. I was like all kinds of things. But it's been, if you don't think the United States has changed since I was born in 1930, we've gone through all kinds of things. And we've gone through great recessions. We've gone through world wars. We've gone through the development of an atomic bomb that we never dreamt of, you know, at the time I was born. So I would not get discouraged about the fact that it never doesn't look like we've solved every problem that's come along. And if I were being born today, you know, I would just keep negotiating in the womb until they said you can be in the United States. So we're all pretty lucky. Do you want to give any? We've got two non-United States guys here just to get the other side. So.
Who now live in the U.S.
Okay, station 4.
This question's from Peter Shen in New Jersey. It's for Mr. Buffett and Mr. Jain. In recent years, large private equity firms like Blackstone, Apollo, and KKR have aggressively expanded into insurance, raising permanent capital, managing float, and aiming to replicate the model that Berkshire pioneered decades ago. Given that these firms are now directly competing for insurance assets, often using higher leverage and more aggressive investment strategies, how do you view their impact on Berkshire's insurance operations and underwriting discipline? Do you believe that the private equity model poses risks to policyholders in the broader financial system? And has this competition made it more challenging for Berkshire to find and price insurance opportunities safely and profitably today?
Ajit?
Okay. Yeah, part of the question is very easy. There's no question the private equity firms have come into this space, and we are no longer competitive in this space. We used to do a fair amount in this space, but in the last 3-4 years, I don't think we've done a single deal. Now, you ought to separate this whole segment in two separate segments. One is the property casualty end of the business and the life end of the business. The private equity firms that you mentioned are all very active in the life end of the business, not the property casualty end of the business. You are right in identifying the risks in these private equity firms are taking on, both in terms of leverage and in terms of credit risk. And while the economy is doing great and credit spreads are low, the private equity firms who've taken the assets from very conservative investments, and I wouldn't say high octane, but they've certainly invested these assets in situations where they get a lot more return on the investment. And as I said, as long as the economy is good and credit spreads are low, they will make money. They'll make a lot of money because of leverage. However, there is always the danger that at some point the regulators might get cranky and say, you know, you're taking too much risk on behalf of your policyholders, and that could end in tears. We do not like the risk reward that these situations offer, and therefore we put up the white flag and said, you know, we can't compete in this segment right now.
Yeah, I think there are people who want to copy Berkshire's model, but usually they don't want to copy it by also copying the model of the CEO having all of his money in the company forever. And I mean, they've got a different equation. They're interested in, and you know, and that's capitalism, but they have a whole different situation, and then they probably have a somewhat different fiduciary feeling about what they're doing, and sometimes it works and sometimes it doesn't work. And if it doesn't work, they go on to other things. And if what we do here at Berkshire doesn't work, I spend the end of my life regretting what I've created. So it's just a whole different personal equation. And there is no property casualty company that can basically replicate Berkshire. That wasn't the case at the start. I mean, at the start, we just had National Indemnity a few miles from here, and anybody could have duplicated what we had. But that was before a G. and the G came with us in 1986, and at that point, the other fellows should have given up.
Yeah.
Station 7, please.
Hi, my name is Marie. I'm from Melrose, Massachusetts. Thank you for the time today. As a young person interested in investing like myself, I would love to hear your insights, Mr. Buffett. What were some pivotal lessons you learned early in your career, and what advice do you have for young investors who are looking to develop their investment philosophy? Thank you.
Well, those are good questions. I wish I thought of them myself earlier in my life. Who you associate with is just enormously important, and don't expect that you'll make every decision right on that. I mean, but you are going to you're going to have your life progress in the general direction of the people that you work with, that you admire, that become your friends. I mentioned a few fellows that have died in the last couple of years. Well, all of those people were people that if we were working together on something 1/10,000th the size of Berkshire, I mean, they'd be the kind of people you'd choose. They're people that make you want to be better than you are. And you want to hang out with people that are better than you are and that you feel are better than you are, because you're going to go in the direction of the people that you associate with. And that's something you learn. And of course you learn it late in life. It's hard to really appreciate how important some of those factors are until you get much older. But when you've got people around you like Tom Murphy and like just name him, Sandy Gottesman, Walter Scott, you're just going to live a better life than you do if you just go out and look at somebody that's making a lot of money and decide you're going to try and copy him or something of the sort. So I'd try to be associated with smart people too, where I could learn a lot from them. And I would try to look for something that I would do if I didn't need the money. I mean, what you're really looking for in life is something where you've got a job that you'd hold if you didn't need the money. And I've had that. And Charlie had it for a very, very long time. In fact, all the fellows I named had it. And they also, every one of those ones I named, they always did more than their share. And they never sought more than their share of the credit. They just behaved as the way you'd like anybody you work with. And when you find them, you treasure them. And when you don't find them, you still keep doing whatever causes you to eat or enables you to eat. But you don't give up on looking around, and you'll find people do wonderful things for you. I mentioned earlier going down to Geico and knocking on the door when the door was locked. I mean, who knows what was behind that door? Like, went in, but in 10 minutes I found that I had a man that was going to be just wonderfully helpful to me. And of course, if somebody's going to be helpful to you, you want to try to figure out ways to be helpful to them. So you get a compounding of good intentions and good behavior. And unfortunately, you can get the reverse of that in life too. And you know, with a lot of, I was lucky in having a good environment for living that kind of a life, and other people, you know, have a whole different environmental situation. They have to overcome it. But don't feel guilty about your good luck if you've got, if you live in the United States, there are 8 billion people in the world, and there's 330 million in the United States. You've already won the game to a great degree, and then just keep making the most of it. But you don't want to associate with people or enterprises that ask you to do something or tell you to do something that you shouldn't be doing. And that's one of the problems. I mean, different professions select for different types of people. And it's interesting to me that in the investment business, so many people get out of it after they've made a pile of money. You really want something that you'll stick around for, you know, whether you need the money. Greg doesn't need the money, Ajit doesn't need the money remotely, but they enjoy what they do, and they're so damn good at it. It's you know, it just, well, I've had the advantage of seeing how that works over time. The best manager I ever knew, and there's a lot of contention for who that would be, but actually was Tom Murphy Sr., who lived to be almost 98. And I've never seen anybody that could get the potential out of other people more than Murph could. I mean, if you wanted to become a better person, you wanted to work for Tom Murphy. And there are all kinds of successful people that really don't have that sort of, don't bring that to the party. And I'm not saying that's the only way to succeed, but I think it's the most pleasant way to succeed for sure. And I think that you know, the Berkshire experience is pretty dramatic. I mean, to operate with Sandy Gottesman from 1963 until he died a couple of years ago, you know, Walter Scott for 30 years, and Greg operated with him for 25 years or so.
Right. Yeah, 30.
Yeah, and you know, you really can't miss it. You know, you'll learn all the time, but you'll not only learn how to be successful at business, you'll learn how to be successful at life. And so that's my recommendation. And for some reason, apparently you live longer too, because it's pretty amazing. I mean, these people I'm talking about, including myself, I mean, you know, I like to attribute it to this and a few other things, but I think a happy person lives longer than somebody that's doing some things that they don't really admire that much in life. Okay. Let's move on to, I guess it's Becky next.
The first quarter ended March 31st, and it did show that Berkshire's cash pile expanded from the end of the last year. But the greatest market turmoil came in April. Martin Devine, a shareholder from Scotland who is attending the meeting today, wants to know, has the recent market volatility presented Berkshire with opportunities? And Martin just wrote in an addendum in the last 40 minutes or so, pointing out that you mentioned Berkshire almost invested $10 billion recently, and wanting to know if you could talk more about that.
Well, I can give you a good answer to the second part, which is no. But $10 billion wouldn't have done that much, you know. That's the other side, another side of it. What has happened in the last 30, 45 days, 100 days, whatever you want to pick up, whatever this period has been, is really nothing. There's been 3 times since we acquired Berkshire that Berkshire has gone down 50% in a fairly short period of time, 3 different times. Nothing was fundamentally wrong with the company at any time, but this is not a huge move. The Dow Jones average hit 381 in September of 1929. It got down to 42. So that's like going from 100 to 11. This has not been a dramatic bear market or anything of the sort. I mean, it was, you know, like someone pointed out, if I've had 250 trading days a day, you know, for however many years I've been old enough to trade stocks, got 17 or 18,000 days. There's been plenty of periods that just are dramatically different than this. I mean, when the day I was born, the Dow Jones was at 240, and that was August 30th, 1930, and between that and the low, it went from 240 to 41. I mean, that's, so if people think that it made a really major change, it didn't. If it had gone up 15% instead of down 15%, people think they take that with remarkable grace. but if it makes a difference to you whether your stocks are down 15% or not, you need to get a somewhat different investment philosophy, because the world is not going to adapt to you. You're going to have to adapt to the world, and you will see a period in the next, certainly in the next 20 years, you'll see a period that will be in what somebody in the market described one time as a hair curler compared to anything you've seen before. I mean, it just happens periodically. The world makes big mistakes, and surprises happen in dramatic ways, and the more sophisticated the system gets, the more the surprises can be out of right field. That's part of the stock market, and that's what makes it a good place to focus your efforts if you've got the proper temperament for it, and a terrible place to get involved if you get frightened by markets that decline and get excited when stock markets go up. I don't mean to sound particularly critical. I mean, I know people have emotions, but you got to check them at the door when you invest. Okay. Station 8, please.
Good morning, Mr. Buffett, Mr. Greg, and Mr. Ajay. My name is Peter Chen. I'm from Shanghai, China. This is my first time attending this shareholders meeting. I would like to ask a question about the wisdom of life. Have you ever encountered any major setbacks or low points in your life? And how did you get through and overcome them? Thank you very much.
Yeah. Well, everybody gets setbacks, and some people have particularly bad luck in that respect, and others get through with fairly minors. But Charlie, he had setbacks. I had setbacks. I mean, it's part of life, and they're not any fun. I don't have any great advice for you about having the time of your life while you're having some major setback. But it comes with lifetime. You certainly have a setback when you die. And so everybody's got that setback guaranteed to them. But some people get, and I mean, it isn't a laughing matter in a sense, because, I mean, people get extraordinary bad luck, and other people get extraordinary good luck. Usually the people who get good luck don't really think it was so much luck as themselves, but you're just going to have it. I think that you're less likely to have it in terms of medical problems, in terms of, various things in life. I mean, you were born at a good time. I mean, if you look all the way through the history of China, when would you rather have been born? 100 years ago, 500 years ago, 1,000 years ago, or now? It's just hands down. You'd be lucky. I mean, if I came from 20 generations of shepherds, I think I get kind of tired of my life just looking at these sheep every day. But we can sit here and I can watch Nebraska not quite play the same game of football that we played 20 years ago, but I mean, everything in life has been made so much better that you've got to figure that you do a lucky straw by, staying in the womb for a couple 100,000 years and then just emerging at the right time. So I would focus on the things that have been good in your life rather than the bad things that happen, because bad things do happen, but it can often be a wonderful life. You could get terrible breaks in it. I mean, so far that really hasn't happened with me, but it's happened with some of my friends. But you get some bad breaks from time to time. But for 94 years, I've been able to drink whatever I want to drink, and they predict all kinds of terrible things for me, but it hasn't happened yet. So, and it's true. I mean, if you look at what pro football players are making now and everything compared to what they were making 30 or 40 years ago, you can say, well, isn't that wonderful? But if you look at the lifespan of professional athletes, after a while you get used to if you really decide that you're better off if you really weren't the first one chosen to be on the baseball team or the basketball team or anything else. The human body, well, Charlie and I think I speak for the others to some extent, that we never really exercised that much or did anything. We were carefully preserving ourselves for the years. So look at the bright side of things to the extent that you can, and you're lucky enough to you're here today. You're healthy. You come from a long distance, and you're getting a chance to learn more about something that interests you, and compare that with the situation a couple 100 years ago that you would have been offered. So anyway, that's enough moralizing. Okay, Becky, we released our 10Q this morning, and we always try to do it on a Saturday so nobody gets a jump on other people. And we just have three simple charts. You'll see that our insurance underwriting income was down dramatically for the first quarter, and last year was as good a year as you'll see in insurance. And it's always unpredictable in insurance, but everything broke our way, or the insurance industry's way last year. Prices are down this year. Risks are up this year. So you don't have to be a genius to figure out what the answer is on that. So, but we do have unusual advantages in the insurance business that can't really be replicated by our competition. That doesn't mean they aren't trying to get advantages we don't have. But we'll try to replicate anything that seems better. In fact, we'll try and top it. But I wouldn't talk about our insurance business as much as I do it unless I really thought we had some really permanent advantages in a very, very large industry. We just announced within the last 24 hours that we and Zurich and Chubb have arranged a joint operation to be the writer of really large sums that very few people can do. And of course, we got to write them at the right price in terms of liability. But we can do that sort of thing without blinking. And anybody that wants to do it wants to get us in it. I mean, so anyway, our investment income did not change that much because we have a float that grows a little bit, which gives us more money for investment, and then we have retained earnings, which grows. So we would expect in any year to have like $40 billion or more that will build up investments unless we find things to do with it. So the investment income rates on treasuries are less than they were, or short-term bills, I should say, are less than they were before. So you had that negative effect pulling it down, but not that much, and we had more money. So we came up with a little more in the way of earnings. The railroad is earning a little more than last year, but it's not earning what it should be earning at the present time, but that's solvable and is getting solved, and it's still an incredible asset for Berkshire. The energy company last year was having particular problems, and those are absent this year, so those earnings are up, and then among our range of general businesses, they were pretty much a push. And I think you did a little calculation the other day on how many were up and how many were down, did Greg?
Yeah, of our 49 that we measure closely, 21 were up and 28 were down. So you can tell it was really a mixed quarter when you go across the non-insurance operating businesses.
Yeah. The next slide, I'm getting a 5-minute warning here. We'll throw the long ball now. Shows our financial condition, which continues to hold a lot more in cash and treasury bills than I would like, but that's simply a question of when opportunities occur, and if you get real opportunities every 5 or 6 years, you have to be patient. Charlie always pointed out that we made most of our money out of about 8 or 9 ideas over 50 years, and we talked about it every day, and we read every report, and we did everything else. But if you think you can get an idea a day from listening to your Frederick book or doing a lot of reading of the financial information published, or forget it. because every now and then you get extraordinary opportunities, and most of the time you don't have much of an edge. We also have on that our float, which continues to build. I don't think there's no company that has, property casualty company that has our float as their Jeep.
Yeah, clearly we are heads and shoulders above anyone else.
Yeah. So that is money that, as long as we're writing it at an underwriting profit, is absolutely free money. And we would expect that over a 50 or 100-year period that we would be able to say the same thing. But there will be years when you have a very bad underwriting record, and it'll eat into the float earnings. But so far, in the last 20 years, I think we've only had one underwriting loss of any.
Yeah, so I think if you look at the entire range, including life insurance, our cost of float is 2.2 negative. That means we've got the float plus somebody's given us 2.2% of that as cash to.
Yeah, it's like running a bank where people leave their money with you and you pay them minus 2.2%, and you don't have any check clearing or anything else to do. And it's included in that. So, but we run our business actually with a different mindset than any other PC company, I think, probably in the world. And I wouldn't be talking about it if I thought they could duplicate it. And then the final page is on share repurchases, and clearly we have not made share repurchases so far this year. And share repurchases, if Berkshire buys Berkshire shares and repurchases, we now pay more than you will pay if you buy Berkshire shares. I don't think people generally know that, but there is a tax that was introduced a year or so ago where we pay 1%, and that not only hurts us because we pay more for it than you do. It's a better deal for you than for us. But it actually hurts some of our investee companies quite substantially. And Tim Cook has done a wonderful job. I mean, really wonderful job running Apple. But he spent $100 billion roughly in a year repurchasing shares, and there's a 1% charge attached to that now. So that's $1 billion a year that he pays when he buys Apple stock in, which we like, compared to what you pay. And that doesn't sound like much, but, well, $1 billion sounds like a lot still. But there are people that want to increase that particular rate dramatically, and you won't read about it or anything like that, but it does make it slightly less attractive than it was before, and we will only buy in our shares if we think that they're almost certainly underpriced, as valued very conservatively, and we get that opportunity occasionally. But the higher that charge goes that the federal government charges us for doing it, the less we will be able to do our repurchases. So on that happy note, we will rejoin at 1 o'clock, and we will, I'm sorry. Correct that to 11 o'clock, and then we will.
Yeah, 11 o'clock.
And then we'll continue to 1 o'clock, and then in the meantime, enjoy yourself, and I think all our stores are still open, so bring the cash register. That's one thing we've really never talked about here, but I spend more time looking at balance sheets than I do income statements. And Wall Street really doesn't pay much attention to balance sheets, but I like to look at balance sheets over an 8 or 10 year period before I even look at the income account, because there's certain things that's harder to hide or play games with on the balance sheet than you can with the income statement. And I mean, neither one gives you the total answer on anything, but you still ought to understand what the figures are saying and what they don't say and what they can't say and what the management will like them to say that the auditors wouldn't like them to say. And I mean, there's just a lot to be learned, and you do learn more. You learn more from balance sheets, in my view, than most people give them credit for. In terms of, I really haven't. I'm not worried about being remembered about that. People don't remember. Well, they don't remember enough about Katharine Graham, for example, in terms of this story that shaped America in many ways. Certainly, it had just all kinds of impact. And I think, I mean, history is so fascinating. And Charlie was probably the best person you could imagine in what he learned. Charlie was never satisfied with just superficial things about any subject. He really wanted to understand it. And he always would tell me that, don't take a position on anything until you can describe the arguments against it better than the person who is arguing with you, that you should be able to argue their case better than they can. He was a remarkable teacher, and but so were those other fellows I mentioned. I've had and of course my dad was an incredible teacher. So you make the most of the people you meet that are going to make you a better person, and probably forget about the rest to quite an extent. Okay, let's move on to Becky here now.
Back to Warren's balance sheet comment. We will have a fortress of a balance sheet. And we want to, I thought Sue Decker, our lead director, said it well yesterday. We've got a significant set of cash right now, but it's an enormous asset to have that. And that will continue to be a philosophy. Yes, when we can deploy it, we'll deploy it well, and I'll come to that. But equally, we do recognize it as a strategic asset. And it allows us to weather the difficult times and at the same and not be dependent on anybody. So again, that will be an investment philosophy. We will remain Berkshire, and we will never be dependent on a bank or some other party for Berkshire to be successful. Thank you. I would then move to touch on allocation of capital will be absolutely critical, but with that comes management of risk and understanding risk. And that falls upon all our managers, insurance, non-insurance, but we'll bring that across Berkshire. And then the other value I would touch on, but that really relates to where I'm going, is ultimately we have a great set of operating companies that do produce significant cash flows, be it in the insurance companies creating float or our various non-insurance companies producing significant cash flows on an annual basis. We intend to continue to ensure that's a strength of Berkshire as we go forward. And it's absolutely critical to our long-term success. Now, with those cash flows and with the float, and then equally as touched on, we have significant resources already in our balance sheet. we'll really continue to move forward with a very similar philosophy, or it's an identical philosophy to what we've had currently and for the past 60 years. We'll start by looking at those opportunities within our business, and by that I mean within our insurance, non-insurance businesses. Are they properly capitalized and have the opportunity to manage their business? And that will continue to exist. They'll operate in an autonomous way, but in the end, Berkshire still manages the capital that will go into those businesses, or what potentially will come out of those businesses. Equally, the next opportunity is to acquire businesses in their totality, or 100%. And there are great times when we can do that. Warren touched on, we had one that was interesting in the last quarter, the $10 billion acquisition. But again, the value relative to the risks have to be right. And if it's right, we want to own it. If it's not the time, there'll be another time to own assets like that. And then there's the opportunity to own pieces of companies through the equity. But as Warren's always highlighted, and again, this will be our approach to how we think around those companies, though we own a piece of a company. We own a piece of that cash flow. We own a piece of their balance sheet. It's not just a share certificate. And as we approach that, and really we'll approach it with the thought that we're going to own this company for the long term. It's, again, understanding what, be it the 100% company or the 1% company, do we thoroughly understand and thoroughly do we have a strong view of what those economic prospects of those companies will look like? And Warren said it earlier, 5 years from now, 10 years from now, 20 years from now. If we don't have a view of that, we won't be investing, be it 100% or 2% of a company through equities. We have to thoroughly understand what those prospects look like, and associated with understanding those prospects, we need to understand the underlying risk of the businesses. And it's really the investment philosophy and how Warren and the team have allocated capital for the past 60 years. Really, it will not change, and it's the approach we'll take as we go forward. Warren?
Yeah, and I don't want to go on too long on this, but
sorry, I covered it.
No, but this is important because it's very obvious that the country, for example, needs an incredible improvement, rethinking, redirection, even to some extent, in the grid. I mean, we've outgrown what would be the model that America should have, and in a sense, it's a problem something akin to the interstate highway system, where you needed the power of the government really to get things done, because it doesn't work so well when you get 48 or 50 jurisdictions that each has their own way of thinking about things. And of course, in World War II, we called in people at $1 an hour, and we knew we had to turn out ships like crazy, and we knew that we had to convert Ford Motor from being a car manufacturer into an aircraft manufacturer in a matter of days, not weeks, not months. So you need that. There are certain really major investment situations where we have capital like nobody else has in the private system. We have particular know-how in the whole generation and transmission arena. The country's going to need it, but we have to figure out a way that makes sense from the standpoint of the government, that stands from the standpoint of the public, and from the standpoint of Berkshire, and we haven't figured that out yet. I don't know whether Greg wants to even explain a few of the major problems, but that is a clear and present use of hundreds of billions of dollars. And you have people that set up funds and say they're getting paid for just assembling stuff, but that's not the way to handle it. The way to handle it is to have some kind of a government private industry cooperation similar to what you do in a war. And I don't think when they were doing the highway system, I don't think that the government set up its own guys that were going to pour a whole cement or anything like that. But you needed a cooperation, and we're at that point, I think, in terms of energy. But I don't think we've made any progress, particularly, though. Tell us more about that, Greg.
Yeah, and I think these are very unique in that, not unique in that it's sort of reflective of where we're at. There will be very significant investment opportunities across a variety of industries, as Warren touched on in the electric industry or the energy space. We obviously know that well with our existing business, and the capital required to meet the long-term needs of what's currently projected as demand is enormous, and we as Berkshire will be in a good position to help address those needs. But the model around it and the risks that need to be addressed to deploy that type of capital will be different than they are today.
Yeah.
Warren's point.
Yeah, the muscle of the federal government will be needed, but the test of whether you can have 48 or 50, depending on the nature of things, jurisdictions that are cooperating to do something that has opposition, will have opposition in every single state. If they'd taken a vote during World War II, or if they'd taken a vote on the interstate highway system, it would have been slowed down to an incredible degree. So the question is how to use these strengths that this country has to actually turn it in to what it should be capable of, while still preserving, a republic with 48 and connected and a couple of unconnected states, and it'll be interesting to see what happens. But we do have capital, and we actually have some knowledge that very few places have. I mean, we know what the game's about, but putting together that energy with knowledge and with capital and everything it's just not easy. And it should be something that we're capable of in the country, but the country was not designed for having, in a certain way, it was not designed for having 48 different jurisdictions that could mess up anything that you were attempting to do. And during wartime, it's one thing to get agreement, but during peacetime, it's something. It's a different problem. That's going to be one for the next generation. But it's important.
And I think hard work takes all of us a long ways in life, and I would never diminish that. There's a lot of things that matter in life, but if you start with a great work ethic and have that attitude that you want to contribute, you're going to go a long ways in life, and you'll find great enjoyment, because as Warren said, you'll then, if you work hard, you're going to find the things you love in life, and it'll lead to that. And we truly look forward to the day you're part of Berkshire. Thank you.
Yeah. Keep a lot of curiosity and read a lot, as Charlie would say. Okay, Becky.
Dear Warren, dear Greg, and dear fellow owners, it's such a pleasure to be here. My name is Revi Panida. I was born in communist Albania, but I'm now teaching economics in London, England. The wonderful writing of Warren and Charlie has significantly shaped my thinking and teaching. I thank you both very much for the many insights over the years. Warren has often written about the importance of Berkshire's earning power to owners. My question is, what was, in your estimate, Berkshire's earning power in the latest fiscal year? It would be great if you can comment on any significant items that either increased or decreased the earning power as compared to reported net income measures for Berkshire. Thank you.
Yeah, well, I think our underlying earning power was affected negatively here a while back by what happened in the utility field. I think that our earning power was not enlarged by any large acquisitions that come along, but they come along periodically. So we will see something at some point that well, could be, on the one that was $10 billion, we would have added to earning power. I mean, why else would we do it? So that's very situational. And of course, it depends so much on what the general market is doing and what interest rates are doing and what psychology is doing. We will make our best deals when people are the most pessimistic. That's been true ever since I was 1930. I was born in 1930. When I was born, things got much more attractive over the next 2 years, and apparently I didn't do anything about it there. But, that was the opportunity of a lifetime, and I blew it by, worrying about the kid in the next crib or something. But over my lifetime, I've had fabulous opportunities sometimes, and they happen because humans are human, and I don't, I'm fearful of all kinds of things. I don't want to try and, be one of the Walendas and walk on a tiny strip between a couple of twin towers or something, or whatever it may be. But I don't get fearful by things that other people are afraid of in a financial way. That the idea that if let's say Berkshire went down 50% next week, I would regard that as a fantastic opportunity, and it wouldn't bother me in the least. And most people aren't. They just react differently, and so it's not that I don't have emotions, but I don't have emotions about the prices of stocks. I mean, those decisions get all the way to my brain, whereas emotions can get bogged down some other place. So Berkshire will increase its earning power over time as we retain money. I mean, we are doing things, making decisions every day. People are working, we're retaining earnings. We will build the earning power, but it won't be coming in any even stream, and it certainly won't be matched dollar for dollar on either the upside or the downside and market prices. But that's what makes it a good business. The investment business is that everything isn't properly appraised, and the sillier other people get, the better your opportunities get. Okay, Becky?
This question comes from Achit Patel, and it's about the big cap technology stocks. In the 2017 annual meeting, you said, Warren, you really don't need any money to run these companies, and referred to them as ideal businesses, referring to the big tech companies, Apple, Alphabet, Microsoft, and Amazon. With all of those companies now announcing massive capital investment endeavors and around AI ambitions, have you rethought the above comment, just in terms of them being asset light and what you think of them as a result?
Well, it's always better to make a lot of money without putting up anything than it is to make a lot of money by putting up a lot of money. And so a business that takes no capital to speak of Coca-Cola, the finished product, which has gone through bottling companies and everything, that takes a lot of capital. But in terms of the selling the syrup or the concentrate that goes to it, it doesn't take a lot of capital. So one is a fabulous business, and one is it depends where it is and everything like that. Coca-Cola is popular every place. But some places, if you're in the bottling business, it costs real money. You have real trucks out there, and you have all kinds of machinery, and you have capital expenditures coming up. And, we've got businesses that take very little capital, that make really high returns on capital. And the ones the politicians talk about as making high returns actually aren't making high returns usually in terms of capital. Insurance, property casualty insurance is kind of a rare business because you need capital as a guarantee fund that you will keep your promises, but you can use it to buy other low intensive capital businesses. You can buy you can buy Apple and have it support that business. So that can be a pretty good business, and it's one of the reasons we've done well over time. But it'll be interesting to see how much capital intensity there's more capital intensity going on with the Magnificent Seven than there was a few years ago. Basically Apple has not really needed any capital over the years, and it's repurchased shares that a dramatic amount of reduction. Whether that world is the same in the future or not is something. Hollywood's answer was always to get their money from other people to put up the capital. A lot of people have gotten very rich in the country by essentially figuring out how to get others to put up the capital. And that's what people do in the money management business, and they get very, very rich because they get an override on other people's capital. And incidentally, if all of you were paying 1% for investment management fees at Berkshire last year, you would have paid $8 billion for managing, and you really wouldn't have had to do it. But investment management is a very good game because other people put up the capital and you charge them for the capital, whether they do well or not, and then you charge them a lot more if they do well. It's a well-designed business for the people who practice it, and who can blame them? That is capitalism, but and I saw that in operation when I was working at Solomon, but I didn't need to see it. I knew what existed anyway. The trick in life is to get somebody else's capital and get an override on it. Charlie and I decided it wasn't too elegant a business after a while, but we were not criticizing the efficacy of it. It just didn't appeal to us after a while. I did it for 12 years, though, or something like that. Not really. The one difference that Charlie and I did from other people is we put all our own money in into it, so we did share the losses with our own capital, but we got an override on other people's capital. And that's been, people have made advances where they get the override on other people's capital without putting up any of their own capital to speak of, and that's a very good business, but it can lead to a lot of abuse. Greg, you've watched capital management in the United States, and would you say that Canada's behind or ahead in this respect?
Well, I think when it comes to their capital system, Warren, it is very comparable. There's no question. Other than as we know, I mean, I think the U.S. as far as having a capitalist system, it would be tough to be touched by any country. And I think when I think of Canada, there's just certain responsibilities or obligations that the government wants to take on and aren't going to leave with the public sector. And that's just a decision that's made by society or by the Canadian people, or if you look at another country, Australia, or wherever it may be. But so it's different. But when I think of capitalism, that drive is there, and the desire to allocate capital properly, it's very similar.
It's produced wonders in the United States if you think about it. But originally, with the Rockefellers and Kennedy and Carnegie's and all that, they actually put up money to build steel mill, or whatever it may have been, with Rockefeller refineries and pipelines and all that sort of thing. They put up money to do it. Now the trick is to use other people's money, basically, and you can't blame human beings for behaving like humans, but you should be aware of what their motivations are. Capitalism in the United States has succeeded like nothing you've ever seen, but what it is it's a combination of this magnificent cathedral, which has produced an economy like nothing the world's ever seen, and then it's got this massive casino attached. So you got the cathedral and the casino, and in the casino, everybody's having a good time, and there's lots of money changing hands and everything, but the cathedral is what, you gotta make sure the cathedral gets fed too, because the temptation, and the temptation's very high now, is to go over to the casino where people say, we've got magic boxes and all kinds of things that'll do wonderful things for you, and that's where people are happiest. That's where you get the most promised to you. That's where the most money is for the people that are pushing things. And the balance between the casino and the cathedral it's very important that the United States in the next 100 years make sure that the cathedral is not overtaken by the casino, because people really like to go to casinos. And it's just so much more fun, and they bring bells, and when you win, and they bring you drinks and everything else, and it's designed to move money from one pocket to another. But and in the cathedral, they basically are designing things that will be producing goods and services for 300 and some million people, like it's never been done before in history. It's an interesting system we've developed, but it's worked. It dispenses rewards in what seems like a terribly capricious manner. I mean, the idea that people get what they deserve in life, and it's hard to make that argument. But if you argue with it, any other system where it seems to work better, the answer is we haven't found one. So I'll leave it to the next generation to send me the answer, and by Ouija board or whatever that works. Okay, station 2.
This question comes from Scott Williams in Portland, Oregon. He said, do you think the net benefit of DOGE will be positive or negative for the long-term health of the United States?
Well, why don't you give me a hard one? I think that bureaucracy is something that is amazingly prevalent and contagious even in our capitalist system, and that big corporations, overwhelmingly most of them look like they could be run better. I'm sure Berkshire does in many respects. And and government is the ultimate. So it really doesn't have any checks on it. And that's why it scares you to some extent about what the future of the currency will be, because they can print currency, and if you have people that get elected by promising people things, and that doesn't mean that they aren't sincere about all kinds of items, but there's no politician that says to anybody that, at least if they have money, that, I really think you have bad breath, and if you don't mind, would you step over and away from me? It just doesn't happen. And so I think the problem of how you control revenue and expenses in government is the one that is never fully solved, and has really hurt dramatically many civilizations, and I don't think we're immune from it, and we've come close to it. But if you tell me how in a democracy you go in and really change things, we're operating at a fiscal deficit now that is unsustainable over a very long period of time. We don't know whether that means 2 years or 20 years. Because there's never been a country like the United States. But you know that if something can't go on forever, it will end, to quote Herbert Stein, a famous economist. And we are doing something that is unsustainable. And it has the aspect to it that it gets uncontrollable to a certain point. I mean, essentially you just give up on it. And Paul Volcker, kept that from happening in the United States. But we came close. We've come close multiple times. And, we've still had very substantial inflation in the United States, but it's never been run away yet. And that's not something you want to try and experiment with, because it feeds on itself. So I wouldn't want the job of trying to correct what's going on in revenue and expenditures of the United States with roughly a 7% gap, when probably a 3% gap is sustainable. And then the further away you get from that, the more you get to where the uncontrollable begins. And I think that it's a job I don't want, but it's a job I think should be done. And Congress does not seem good at doing it. Well, it sounds like you should quit while I'm ahead. Well, we've got a lot of problems always as a country, but this is one we bring on ourselves. I mean, we have a revenue stream, a capital producing stream, a brains producing machine like the world has never seen. And if you picked a way to screw it up, it would involve the currency. And that's happened in a lot of places. And the incentives plus the checks, well, there aren't any real checks. In theory, you would make it so there was substantial downside for anybody that screwed things up, but there isn't downside. There's upside. So it's the problem of the most successful company history of the country and the history of the world. And at this point, we got a little room to go in solving them. And with that, I'll shut up and go on to station 3.
Hello, Mr. Buffett. My name is Saskia from Gifhorn, Germany. And first of all, I want to thank you because you made such a great impact in my life and the people I love. And that's priceless.
Well, thank you.
Mr. Buffett, imagine it's 1776 and you're sitting alongside Benjamin Franklin, helping to shape the foundation of a new nation. What core economic principles would you advocate for building a fair, resilient, and opportunity-driven capitalism society? One that supports long-term prosperity for future generations?
Well, I probably, that's a good question, but I would probably say to Ben Franklin, you just keep thinking and don't talk to me because you'll come up with some better ideas than I will. He was, incredibly remarkable person. I mean, you would say he's almost probably the last person to almost have a grasp of every aspect of activity in the country. He invented all kinds of things, and he incidentally, we were talking about power of compound interest and that sort of thing. He left a will that left a sum of money to Philadelphia and another sum to Boston that would serve as an example for a couple hundred years, of the power of compounding and all kinds of things. He was so far ahead of his time that the best thing I could do if I was under that tree with him was to get out of his way and let him just keep thinking. He saw the problems that success could bring to a society as well as other problems. I mean, more immediate problems that in all kinds of fields. But the problems of how to take 8 billion people, because there's no way we can separate ourselves from the rest of the world. We can be an example to the rest of the world, and I think it behooves us, since we have had all this good fortune in this country, and we do have a pretty good system. I don't think you get very far by lecturing the world on how you're the one that should tell them what they should do with their lives. I think you get a certain amount of resentment when just a few hundred years ago, a whole different group of countries were running the world, and now you start giving them advice, and I think it's a real mistake in communication or in persuasion to lecture a bunch of people where you've just won the game. I mean, but anyway, I would say that I would advise Ben to figure out how to win the game and keep a certain amount of humility at the same time. And I would tell him to try and design a system that doesn't invent too many things that can destroy the planet, that become uncontrollable once you get them out there. There was no alternative to us developing the atom bomb, but the expansion of the number of people that have the ability from 1 to 8 and 9 probably pretty soon with Iran. I mean, that's a mistake that society just could not afford to make. I mean, solving the problem with 9 variables instead of simply one. Now, it's totally understandable. My dad was in Congress when the atom bomb was first used. It's amazing how Sam Rayburn kept the House of Representatives uninformed, because they're supposed to appropriate all the money, and he had 435 congressmen there, and they had no idea they were appropriating money for Los Alamos, or what was going on in Chicago, or what was going on in Tennessee. But anyway, we do have a society that is far beyond anything that Ben Franklin dreamt of. It's achieved some of the, or it's moving toward, in the right direction, toward solving some problems where we made kind of broad declarations about all men being created equal and et cetera. And then we did some of the things we did. But generally speaking, we've moved in the right direction. But we face problems that I don't know how Ben Franklin would attack the problem of what you do once you get weapons of mass destruction in many hands, and when you essentially look at the world as something where there are winners and losers, and that the winners are, humiliate the losers and do all kinds of things. But I'll let the people that are a lot younger figure out the answers on that. But it's still the most wonderful. There's never been anything you could dream like what has happened in the United States. So we still, it's the best place and the best time to be alive by miles in history. Just think of a couple hundred years ago and somebody, yanking out a few of your teeth and pouring whiskey down you and doing, and the subsistence and particularly in this Midwest, just imagine waiting till the Missouri froze over every year just to see whether you could get your wagon across and maybe have a pregnant woman in the back, it's just amazing what has happened of a positive nature during my lifetime. And then the question is how do you keep it and how do you improve it? And I do think that fundamental to all of it, though, is having a currency that does not get debased. What that does to the stability of a society where all the people that trust their government get screwed and all the people that figure out ways to profit off of it become rich or richer. I don't think you want a society that operates in that manner. So anyway, let's see, that was section 3. So we're going to Becky, is that right?
Hello, Mr. Buffett and Mr. Abel. My name is Kansas Lohmeyer. I am a junior at Elkhorn South High School and was born and raised in Omaha. My question is directed to Greg Abel. Berkshire Hathaway is the second largest utility provider in the United States, and a 2025 Reuters investigation found that coal fleet is the dirtiest in the nation. There is currently no concrete plans to retire coal and fully transition to renewable energy. I'm 17 years old. Considering that, what do you have to say to young people like me who will live with the consequences of climate change caused by companies like Berkshire?
thank you for your both your question and your comments, because it is important to understand, say, Berkshire Hathaway Energy, but also how they operate, and maybe using Iowa at least as a starting example, because I think that was one of the states cited in the report. One of the important things that I'd say early in us acquiring our energy companies, and I go back to when we acquired Mid-American, we acquired it in 1999. Berkshire purchased Mid-American in 2000. But one thing that became very clear to myself and our teams was that what we do within our utilities is really driven in two fronts. One, we absolutely have to meet the requirements and the law that's laid out federally. But most importantly, we had to recognize we implement public policy across these states. And that was an interesting conversation when I go back to Iowa. And again, the report cited that as a significant problem. It was early in the 2000s when, for the first time in Iowa, we were going to, as a utility, be short power. So we didn't have the energy, and we entered into a significant discussion with our governor at the time, and really sat down and said, where do you want us to go as Mid-American? And what resources do you want as a state? And at that time, we were predominantly a coal-based state. And we recognize that, obviously, and fundamentally, personally viewed it as a risk, but we needed to have that conversation with our state and as to how we would manage that going forward. The interesting thing was that as we had that conversation in the early 2000s, again, with the leadership of our state, it was clearly decided we wanted to continue to be long power, so i.e. not be short for our customers. We discussed the type of resource, and I remember a very clear conversation around we wanted to stay balanced across a variety of energy sources. And at that time, it was really coal and natural gas. And at that time, we made the decision to build the largest wind project in the U.S., in Iowa. So we undertook an effort to build three resources, a coal plant, a gas plant, and what was the first wind project we owned in Mid-American. And again, it was very consistent with what the state wanted, but we also laid some important groundwork there because we started to define the importance of renewable energy, non-carbon resources, but it has to be consistent with what the state wanted. And we've gone on since that period of time to deploy $16 billion into Iowa associated with renewable energy. Again, very consistent with what our state wanted us to do, i.e. the underlying policy. We don't get to make that decision and just spend $16 billion. It's done in conjunction with our governors, our legislatures, our regulators. And at the same time, we've had the opportunity to retire 5 of the 10 coal units. Now, as the report highlighted, I understand people would like those other 5 coal units retired at this time. But to think we deployed $16 billion to retire 5, and it's a very good outcome for our customers. We've been able to maintain our rates. They're some of the lowest in the country. So it's been done very efficiently. But the reality is we still need those 5 coal units to keep the system stable. We cannot have a Spain-Portugal situation. So we absolutely respect the input. We absolutely respect the process, and we'll continue to work with each of our states to identify the path they would like to chart and we work hard to ensure there's good balanced outcomes, because we recognize the challenges they're associated with other folks' desires. So I think you'll continue to see our utilities implement policy consistent with the needs of their stakeholders, their customers, and at the same time always respecting what's required by any of the federal standards. So thank you for your comments.
Okay, 31. Let's see. Becky.
This question comes from Billy DeRoss. He writes, Mr. Buffett, as a nurse from New York State, I've spent years struggling to secure good health insurance for myself, even while working on the front lines to save lives. In New York, accessing insurance means navigating a confusing state-run system that feels like it's designed to overwhelm. I'm curious, what ultimately led to the end of your healthcare venture with JP Morgan and Amazon? And given your commitment to value and long-term thinking, would you ever consider taking another look at health insurance reform in the U.S.?
Yeah, we're spending close. It's hard to get the precise figure, but close to 20% of GDP on health. And if you go back to 1960, there were a number of countries that were each spending around 5%. And then the lines began to diverge dramatically. But the mathematical fact that there are only 100 percentage points in the equation didn't change. So we tried that experiment with JP Morgan and Amazon, and we had three people that didn't think they knew the answer, and but thought that, in my case, I used the term that it was a tapeworm in the economy, and we also found out that the tapeworm was alive in every part of the country. I mean, the hospitals liked it. The hospitals had prominent people who worked with people. People generally liked their doctor, didn't like the system. I mean, all kinds of things. But in the end, J.P. Morgan and Amazon and Berkshire were not going to have any effect on changing that 20%. Now, that 20%, there are only 100 percentage points available, and when other countries spend 6 or 7% and perhaps use our system to their advantage, which is also very true. That is an enormous percentage of an economy, and we simply, it was too entrenched to really do much in the way of change. And we spent some money on it, and we did some work, and we learned a good bit about our own systems. And we saw the degree to which the present system was ingrained in so many people's, whether the healthcare providers or whether everybody, and these aren't evil people. I mean, they're just going about something and trying to save lives. But we found that whether it was in Canada or France or Britain or wherever it might be, that if you looked at our costs, that they were just far higher, and to some extent we were subsidizing the rest of the world, and people would come to the United States to do the really unusual or challenging aspects of health in terms of operations and that sort of thing. But we made no progress. And there comes a point where, well, the government's, it's so involved in the situation, and health is so important to everybody. And as I said to Jamie and Jeff, I said, well, the tapeworm won. And there are problems of society. When you get 20% of your GDP going into a given industry, the degree of enthusiasm for changing that industry, the political power that the industry will have, and that doesn't mean they're evil. And everybody, they just end up there. And so I don't know. We came to the conclusion we didn't know the answer, three of us, and we had the money to do it, and we didn't know how to change how 330 million people felt about their doctor, felt about their health care, what they felt entitled to, and it won't change by itself. And government is the only one that can change it. And the only people in government that can change it are getting a majority of 435 people and 100 people. And my dad lost one election in his life in 1948. And he was a very strong Republican. And in 1950, he went back and beat the guy that beat him in 1948, and he got the doctors behind him. And he did they're very well, and they believe 100% of what they're doing. They're helping people every day. And during the pandemic, the sacrifices made by people save other people, just incredible. Can you imagine working in something where they're bringing in people that are, going to die by the dozens and dozens and dozens, and you try to somehow keep your own morale up and keep working with them. So you can't argue about the importance of it, but our costs are so different than any country in the world that it's a huge element. And we're a very rich country, so we can do things other countries can't do. And through our elected representatives and a whole variety of things over time, we've developed a system that is enormously resistant to any kind of major change. And it's important in every community that it's in. So I wish we had an answer for you, but I was somewhat pessimistic going in, and I was a little more pessimistic when we came out. But I'm glad we did what we did, and we learned something about our own failings in the process. So Berkshire, in effect, got its money's worth, but we didn't kill the tapeworm. Okay. Trying to change things in government it's an interesting proposition in the country because you get self-selection in terms of the people that go into government and continue in it. And to some extent, they have to make decisions that they don't like as they go along. And they learn to accept them or to rationalize them or whatever it may be. But it's still about, this country's worked out better than any country in the world. So but you can't argue it as a failure, but you can argue that there are certain problems that are terribly tough to figure out ways to solve. And of course, one of them gets back to the fiscal problem I mentioned before, because it's easy to spend money and it's hard to cut people's receipts. And if you get elected, you're going to say to yourself, well, I can do more good if I stay in than if I really vote my conscience on this sort of thing. So, you give away a little bit here and a little bit there and a little bit there, and finally you don't recognize yourself in the mirror anymore. And that's. I grew up in a political family, but and I watched how people behaved, and they behaved like human beings, which is what you have to expect. And I behave like a human being, so we still manage to keep moving forward in a dramatic way. It's so much better to live here than it was 100 years ago or 200 years ago. It's dramatic. So you can't say the system's a failure, but you can say that it is very difficult to make major changes in it. Okay. Station 5. Tomorrow we're having a board meeting of Berkshire, and we have 11 directors. 2 of the directors, who are my children, Howie and Susie, know of what I'm going to talk about there. The rest of them, this will come as news to. But I think it's the time has arrived where Greg should become the chief executive officer of the company at year end, and I want to spring that on the directors effectively and give that as my recommendation. Let them have the time to think about what questions or what structures or anything they want, and then as the meeting following that, which will come in a few months, we'll take action on whatever the view is of the 11 directors. I think they'll be unanimously in favor of it, and that would mean that at year end, Greg would be the chief executive officer of Berkshire, and I would still hang around and could conceivably be useful in a few cases, but the final word would be what Greg said in operations, in capital deployment, whatever it might be. I could be helpful, I believe, in that, in certain respects, if we ran into periods of great opportunity or anything. I think that Berkshire has a special reputation that when there's times of trouble for the government, that we are an asset and not a liability, which is a position that very hard to have, because usually the public and government get very negative on business if there's a time like that. But so I think there might be a time when I'd be helpful, but Greg would have the tickets, and he would make, like I said, whether it's acquisitions, I think the board would be more welcome to giving him more authority on large acquisitions, probably if they knew I was around. But he would be the chief executive, period. And like I say, the plan is to, and Greg doesn't know anything about this until what he's hearing right now, but that, yeah, the board will be able to ask me questions tomorrow as to a little more of the specifics of what they should be thinking and all of that. But they'll digest it, and then at the next board meeting after that, if we, as I would guess we would, if they act, then obviously we have something to announce to the world. It's a material change in Berkshire, and we'll go forward with that operation, and I will play with a Ouija board or whatever, and that comes out in terms of doing things. But I will not. I have no intention, zero, of selling one share of Berkshire Hathaway. It'll get given away gradually. It just won't. Thank you. Okay, drink your Coke and calm down. I would say that I would add this. The decision to keep every share is an economic decision because I think the prospects of Berkshire will be better under Greg's management than mine. But you know, I will come in and there may come a time when we get a chance to invest a lot of money and if that time comes, I think it may be helpful with the board, the fact that they know I've got all my money in the company, and that I think it's smart, and I've seen what Greg has done. So that's the news hook for the day, folks. And thanks for coming. The enthusiasm shown by that response can be interpreted in two ways, but I'll take it as a problem. Thank you.